Hello, my dear listeners. This is going to be a follow-up on my prediction of the $100 silver price for this year. And I just want to recapitulate for my new subscribers how I came to this in the first place. Because I said that the silver in October, on the 6th October of 2010, I made the video and I said the silver should go up to the fair price. That's how I will call it. I call it correction to the fair price, and I said it's gonna do it in the next 12 months because we are in hyperinflation and we are in a currency crisis. And I said, okay. And then I tried to establish the fair price for silver. At that time, I said I started that the gold should have been at 3,500, and I picked the prices between ratio to silver to gold between 20 and 40 to 1. So I get 87. 0.5 and $175 at the 20 to 1 ratio, and that's how I took the average price. It's about should be $105 before the end of this year. Well, I said it in 12 months. Sorry, so that should be by November of 2011. And when I start my calculation, I said that silver should grow compound interest 11.8% per month starting from October. And so there is this rally that we had that was following this pretty close, and we even outperforming. So there's a price that we should have on November was 20. The projected price of growth was 28.74, and we had 29.50, and then it slows down by sorry, that was in December. We were over target, and we were over target in November, but since January we started lagging. The projected price was $32, and then we were at 29. In February, 35, almost 36, and we were at 39. That was a big gap. And now we start catching up. So the March, we were at 36 on the 6th March, according to the chart I just checked, American dollars, and we should be at 40.17 to be on schedule. And now today, the April 6th, we are at 39.65. And we should be about 44.91. So this is really arbitrary numbers. It's basically that's the rate of growth. This is line compound interest of 11.8% per month. But of course, it's going to be volatile like this. And if we want to go back to this rate of growth in May, in the 6th May, we should be at $50.25. When I think that is going to be really realistic number. So we will go back. This is actually the trend line of this rally that we had from or started in August and went through December. So this is about, if you drew this line further, so you get in November, in the 6th November, you get $98.5, which is with the premium. I think we're going to be even over my target of $105 for physical silver. So now I'm just gonna check something about hyperinflation. This is a chart of silver of today. So the close is 39.57. I cannot really focus, but look this inflation. So this is the cotton chart. Starting from this is daily chart starting from November up till now. So we had run from about $120 average here in the beginning to 200 over $200. About, I would say, 90% increase. Here is the copper. Copper is consolidating. This is a 1-year chart, but it's really a good run. If you look 5-year chart, we overshoot 2007 2008 highs by now. If you look rice has been lagging, but I think it's been lagging for political reasons, because there's just too much people that would revolt if the rice would rise, but it's already, if you look this recent run from January to today, from $10 to about 14, and this one is the champion. But this is corn. Okay, this is a chart of corn starting from April last year, and at about 375, I guess, that per ton, or and it's almost double in a year. So the price of industrial price of corn is double in a year. So, like, you know, guys, how fast this paper will lose money. I think the rate of inflation will just accelerate from this point, and I think the target will be respected for this year and probably overshoot, but it's not going to be equal rise. It's going to be very, very volatile. So if you don't, that's, you know, if you're waiting for the pullbacks and you think $39 is expensive plus some premium, so, you know, I'm suggesting that you protect your purchasing power. Thanks for watching.